Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we're going to get right into this, baby. This video is for Thursday, Jan 29th, 2009. And traders, we got another green on me, and I'm going to tell you right now that scares the crap out of me. A green Omni in this environment. Don't ask me why we got to get long, but I can say this. I never, ever trade against the Omni. The Omni wants me to get long. Long I will be. Of course, I have stops in. I got my plan. I got a trading plan for tomorrow. Traders, we got durable goods coming out tomorrow morning at 8:30 OST. That's Eastern or Omni Standard Time. We have initial unemployment claims, new home sales. Don't ask me how the market's going to rally after those figures, but my Omni says, baby, we're going up, and if it works, it's going to be a good day. If not, our stop is in, and we'll start looking for more downside. But I left you off with the video 2 nights ago. In that video, I showed you that we had been in a parallel channel in the S&P for quite some time, and we kept selling the high of that channel, and it would break, and we'd sell the high when it got there again, and it would break. Well, finally, it broke out above the channel, and I showed everybody, okay, the channel's done, over, we're up above it. It's morphing now into another formation, and that formation was the wedge formation, and that prompted me to get my Omniacs long. Well, we had a good day. Imagine that. We got long in this bear market. We had a great day. Wednesday was the second day of a Fed meeting, the FOMC, the interest rate decisions. I don't trade on a Fed day, so yesterday we had to sideline it, but Omni was green. Omni looked for the 870s. We got to the 870s, so the Omni seems to know what's going on here, right? Me being scared of getting long is a human emotion, and emotions are out. So I'm just getting long, baby, and here is what the plan will be. It's on the board, but I'd like to show you some charts for a moment first. Let me show you where we are, what the technical setup is, and then I'll tell you about the trade that we're looking to do, traders. Let's go look at some charts. Okay, traders, what you're looking at here is the March S&P daily bar chart. The Omni wants to play this wedge formation from the long side again. As I told you personally, I'm going to be looking on the constant prowl for a return to the downside. I never trade against the Omni, so I will be buying on the onset, no doubt, and here is why. Traders, we are in this wedge clearly defined with those red lines. We broke out of this parallel channel that we had made a lot of great trades in, and the market started to move higher. The Omni immediately started to point up, and we became buyers. Well, the Fed came out with their decision now on Wednesday, and the market moved higher. The Fed did not change rates as expected. The market started to move higher. Now we have the Omni's proprietary moving average right here. We have the top of this wedge channel coming in at the exact same spot. If you ask me, that's a target, and the market is going up for that target. Technically, we see a play up there. You could move into the 900 area. Who knows? As you know, I'm a bear, but I trade what I see, not what I hope for, not what I want to be part of, not what my position says. I trade what the technical analysis says. All indicators are pointing north. The chart formation's pointing north. I am going with that trade. Again, we have durable goods, initial unemployment claims, and new home sales, which, in my opinion, would make the market break down. But the indicators are bullish. The Omni is bullish, and that clearly looks like a nice little buying pattern right there. So let's see if we can get this to get at least to the top of the wedge and see what happens. If, in fact, it fails, hey, that's what stops are for. Our stops are in, and we'll look for some downside, and we'll get short at some point. But for tomorrow, as you can see, there is a technical reason why you would want to be buying this. You hit the bottom, you hit the top of the wedge, you hit the bottom of the wedge, you hit the top of the wedge, you hit the bottom of the wedge. Now it's heading for the top of the wedge. Just like in those parallel channels where I showed you hit the top, then the bottom, then the top, then the bottom, then the top. Well, many formations act the same way. Markets will trade inside of those formations. The formation is here. We're rallying to the top of it. Again, 1, 2, 3, 4, 5. Why not go for it? So there is a good technical setup here for a rally. Albeit, again, the fundamentals aren't set up for a rally, but I trade technicals, not fundamentals. Technicals call for a rally. Traders, if you are a fan of the Dow Jones Transportation Average, you will see a monster double bottom that was formed in the Transportation Average just 2 days ago. We buy double bottoms. We sell double tops. That's an omni trading rule. The leader, in my opinion, of the indices is the Dow Jones Transportation Average, and it has a double bottom. This thing bounced twice, and it's on its way up. A double bottom in the transports. Indicators pointing higher. I think the Omni's got something smart here, so I think we should go with that trade. I'm going to show you one more chart now because I want you to realize how well these formations do work. Okay, traders, you are now looking at the Euro currency March daily bar chart. We have been in this parallel channel for a long time now, and every time the market hits the top, it drops to the bottom, hits the top, drops to the bottom, hits the top just today, or I should say yesterday, Wednesday, Jan 28th. We hit the top of that channel. I warned my OmniX that it's likely going to come off. I showed it to him in a live technical analysis class at the site, and lo and behold, we've dropped 100 points already this evening. Traders, these channels and formations really do work well when used in conjunction with indicators and market direction. You combine market direction with solid indicators and a solid formation, and you have a roadmap to where the market is going next. Remember that we're day traders. We take one day at a time. It actually makes it slightly easier for us to trade because we don't have to worry about where we'll be next week. We only have to worry about where it will be in the next few hours. Traders, as you can see clearly, these formations work well. Do your homework, draw up your formations, figure out where your buy and sell levels are, write them down as a trading plan, and act out that plan. So, you see those charts, traders? I am telling you, these formations work well. We have a green Omni for tomorrow, or I should say today, because this video is being shot Wednesday night for Thursday's trading. We have a green Omni. I showed you the technical behind it. Now, here's the plan. Omni says buy the mid to high or high to mid 850s. We're trading 863 and a half or 863, 75 right now as I speak to you. If we break down under 860 and get into the 850s, Omni wants to get long right there. Again, durable goods, initial claims, Europe going crazy. Omni wants to get long. Yeah, baby, it's going to be a crazy day. But I'm getting into it. I'm buying this thing in the 850s. My profit objective is up above 900, traders. If the Omni is right and it starts to go, there's enough momentum to likely get us up above 900. On the way up, if we get lucky and get long and it starts to go up, we got resistance in the mid-880s, more formidable resistance around 892, and then boom, up to 915 maybe. That's what the Omni's looking for. That's what I'm looking for, and we'll see what happens. Again, traders never trade without stops. You put your stop in first. It's your protection. Then you put your buy orders in. If the stop gets hit, traders, so be it. It's part of the trade. Listen, you cannot have just winning trades no matter how good you are personally, no matter how good the system is that you find. Winning trades and losing trades are an integral part of being a trader. You're not getting one without the other. So you must accept losses as readily as you accept profits. If your stop is in, you know exactly what you will lose if the market goes down there. So once your stop's in, you can relax a little bit, right? Your stop is in. When someone says, how much could you lose on that trade? You go, well, $500. That's exactly how much I could possibly lose. It's maybe a little bit more if the stop goes through a little bit, but you know your risk. If you know your risk before you get in, there are no emotions. There should be no worry. You should be not biting your nails. You shouldn't be pulling your hair out. You shouldn't be at the screen going, oh my God, what's going to happen? You should relax. Your stops are in. I preach this. I live it. I teach it to all my Omniacs. If you are looking for longevity in this industry, you put your stops in and you just take the hit if the hit comes and on to the next trade. That's what we do at the Omni Trading Academy. I've been trading 27 years and I'm still standing, traders. I am still standing because I have a rule base and I adhere to those rules. And of course, one of them is, no matter what I think, if there's a green Omni, you get long. So hey, I'm going with it. All right, traders, so don't forget, put the stop in, put the trade on if you agree with it, and let it rock and roll, and we'll see what we get. Hey, the week is young as far as I'm concerned. It's only going into Thursday. We can easily fight back if we had a losing day, and that's part of trading. So, not that I expect one, but hey, getting along in a bear market is certainly not anything I want any part of, but something I will do because my emotions have nothing to do with the technical setup. All right, traders, if you'd like to learn how to do technical analysis and learn the mentality behind being a good, steadfast trader with the rule base, come on down to www.livewithoscar.com, jump into my chat rooms, and allow me to mentor you and make you a better trader, both mentally and technically. You need both parts to even get close to being a good trader, so come on down and grab your education. Traders, give me a call anytime during the night, 702-629-4755. Don't forget that Euro trade I showed you, that Euro chart. I mean, there's a setup there. If you look at this video and look at that chart, there is a setup there. Take a look at that. All right, traders, I'll leave you with this. Don't forget, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.